we are lucky again to be talking about something else that is completely new in financial markets, and that is the Sustainable Development Goals. And we have an excellent panel of 6 people today, all of whom have different expertise on this issue to contribute. It is a very multifaceted thing and it seems to become more and more part of the conversation in financial markets. Of course, the traditional task of investors is to make money for their clients with varying degrees of ethical constraint. But the creation of the UN Sustainable Development Goals in 2015, 17 broad goals to be achieved by 2030, such as no poverty and peace, justice, and strong institutions, has shifted the conversation. There's a widespread sense now that the private sector, including capital markets, ought to be helping achieve these Sustainable Development Goals. Indeed, it's perhaps even a duty for the private sector, and that includes capital markets. I'm going to first ask the panel to introduce themselves, and then we'll get into the topic. Seb, you want to go first?
Okay, so my name is Seb Bilo. I'm a partner and head of research at a business based in London called Web Asset Management. We are listed equity investors, and our philosophy, just very quickly, is we believe that we are in the early stages of an industrial transformation, that the economy is shifting to a more low-carbon, more sustainable basis, and our strategy is about giving equity investors the purest exposure to the companies that enable and benefit from that shift. That's basically what we're trying to do.
Thank you.
My name is Michael Bennett. I'm the head of derivatives and structured finance at the World Bank. As most of you probably know, the World Bank is an international organization. We have 189 member countries, and our basic goal from the beginning, since our first loan in 1947, has been development finance. And now, with the creation of the Sustainable Development Goals, those goals have become a framework, I would say, for everything we're doing now at the World Bank.
I'm Lauren Compare, one of the managing directors at Boston Common Asset Management. We're a niche global ESG firm based in Boston. What underpins our investment philosophy is actually protection of the commons. And in fact, I sit on the board of the Access to Nutrition Foundation based here in Amsterdam. And so there provides a unique perspective for myself in looking at how we can achieve some of the sustainability goals around health and nutrition.
Thank you.
My name is Gerwant Havenkamp. I'm the founder and executive director of Index Initiative. That's a foundation based here in Amsterdam and one of the founding partners of the World Benchmarking Alliance, which is a new institution that will be launched by the end of this month in New York during the UN General Assembly. And this institution essentially has tasked itself with assessing companies on their contribution to the SDGs and benchmarking it, much like the Access to Nutrition Index is doing. We can't do that alone, so a big emphasis is on the alliance. So the World Benchmarking Alliance is now supported by 17 institutions, like GRI, some of the sponsors here, and hopefully soon more. IFC is part of that network too. And what we're trying to build is basically a movement that allows for developing methodologies that can assess and compare corporate performance on the SDGs.
Thank you. Will.
Good morning. I'm Will Alton. I'm the Global Head of Responsible Investment for First State Investments. We're the asset management arm of the Commonwealth Bank of Australia. I'm based in London. I'm also the chairman of the European Sustainable Investment Forum based in Brussels. And I've recently been asked to lead a piece of work for the UK's Investment Association on looking at sort of standards and definitions and labelling of financial products in regard to sustainability.
Thank you.
I'm Esther Vitorino, the head of capital markets engagement at GRI, the Global Reporting Initiative. GRI provides the global standard for corporate sustainability reporting on environmental, economic, social, and governance issues. We've been around for 21 years. de facto, most organizations who report on their sustainability issues use or are inspired by the GRI standards to guide their reporting practice.
Okay, great, thank you. So I'd like to begin by asking the panel whether the Sustainable Development Goals are bringing a fundamental change in the social role of financial markets, or will that role not really change fundamentally? Lauren, do you want to start?
Thanks. I think the Sustainable Development Goals provide a more intentional way of integrating or changing the narrative around including externalities that we've said have been outside the investment process and integrate them more into the investment process. I also think it provides some clarity and framework for how companies can prioritize the way in which they're changing policies and practices and frankly innovating in what we're calling the new economy or the circular economy. Stop there.
Thank you. Seb?
Well, we'll see whether they deliver fundamental change. I'm skeptical, to be honest. I mean, I think they do provide a piece of the puzzle. This concept of sustainability in the previous panel, I think Ingrid was saying how banks, the conversations you've had with banks, what is sustainability? You know, there's still a question about what actually is sustainability. I think the SDGs take it down from the headline and give you more granularity as to what it actually is that we're talking about. So I think that's certainly helpful. But in order to deliver fundamental change, you need consumers to change, you need regulators, you need technology, you need culture, and all of that's still to happen. It's not just the SDGs that will deliver that.
Thank you. Yeah. Michael?
No, I mean, certainly for us as a development institution, the SDGs are very important as a framework in setting targets and goals for specific projects we do in different areas. I think broader, looking at the investment community generally or finance generally, you can say the SDGs are part of a process of focusing people's attention on the whole issue of sustainable finance and the need for it. I mean, we've certainly seen, or I've seen personally at the World Bank, selling bonds from the World Bank 10 years ago, when I would go on investor roadshows, almost no one asked what we did with the money. It was they wanted to know, our financial policies, our ratios, and very few people asked what we did with the money. And now that's drastically changed. I mean, it's not just ESG-motivated investors. It's every investor now has an interest in what we're doing. And I think the SDGs are part of that process of making people more interested in and more focused on sustainability.
Okay, thank you. Gilbrand?
I think it helps to go back to the establishment of the SDGs, which in itself I would like to call a small miracle. The fact that 193 countries agreed on them with a strong involvement of civil society and businesses, that's something in and of itself. And if the question, and of course you can be optimistic or skeptic about the role that finance is going to play, but putting it differently, if the financial sector doesn't change, we won't achieve the SDGs. It's as simple as that. And it's true that the companies in which it invests need to change. It's true that consumer behavior needs to change. It's true that many governments need to step up. But the way that the financial sector is currently structured is in many cases goes against what we try to achieve with the goals and needs to change in order for us to be able to achieve the goals. So whether or not it will, that's something to be seen, and we can say that in 2030 when the deadline has been set for the goals. But I dare to say that if the financial industry doesn't get behind these goals at scale, and how that looks and how that's to be done will happen in many different ways, we will not achieve them.
Would you like to say how it needs to change?
Well, I guess the point made earlier about that you didn't get any questions about how money is invested, just on the returns, and the fact that that is changing, so that we need to understand that the companies in which we invest or the companies that we lend money to, what do their products and services actually do? Who do they serve? How do they empower these people? How do they bring us closer or further away from that circular economy or that? Those are the types, those are sort of the major transformations that need to happen in society. Business is part of that, and financial industry needs to understand what sort of, in the previous panel, someone mentioned the word transition risks, right? So we need to understand that from a financial industry, needs to understand it from a risk perspective, but it also needs to understand who are the new winners from these transformations, because they will be there. If we look at if you look at the meat and poultry industry, there will be big losers in that industry because of the transformation that needs to happen from a climate perspective, from a more general natural resource perspective. But of course, there will also be winners in that industry. There are alternative protein companies, etc. And that's sort of the type of understanding and depth that financial institutions need to create for themselves. And we hope to help there.
But isn't there actually, in order to achieve the SDGs, the private sector needs to step up in terms of actually closing the financing gap? Because I think it's UNCTAD that said that 5 to 7 trillion per year needs to be invested in order to achieve all the SDGs, and only 1 trillion will come from the public sector. So where will the rest of the money come from?
Okay, Will. This question of fundamental change, I'd just like to hear your thoughts on that, because in a way, Lauren and Seb and Michael were not kind of saying there was a fundamental change, perhaps. Maybe I'm summarizing wrongly. But Brand is saying there needs to be one. So what as you working in an asset management firm, what's your perspective?
Well, I think in terms of the kind of social utility or social purpose of capital markets, I mean, we've long since forgotten that since the 80s, really. That's when that sort of stopped beginning to be a kind of feature of capital raising and capital markets. And many reasons for that, largely technology-driven, really. But I think in terms of the SDGs, will they change that sort of short-term, more trading mentality and culture? No. I don't think that was their purpose anyway. But the challenge we've got is, we all can easily talk about the need to do things, and everybody would agree, we need to do a lot of things to transition to a low carbon economy. There's many different things people can sort of point at and make a great case for. But the challenge we've got is, how do we bring that to the reality of sort of, well, how do we do that, and actually why? What is the purpose of doing that, and how does that benefit the different stakeholders that we serve? Now, in this room, we serve people's whose savings and pensions are invested in the markets that we function in and operate. So the challenge we've got is, how do we bring these things together so people start to care a bit more about how their savings and pensions are invested? And today, they don't have enough information to know that. So the SDGs can play a role as a framework to enable some disclosure on a range of different financial products you get to show, hey, my money is actually being invested to the benefit of, marine sort of health. Now, some people might actually quite like that and might choose to funnel, more of their money in that kind of product. So we have to kind of move from the need bit, which we all kind of can easily talk about, to the reality of, what is it going to take to start to move people to decide to move their capital into different places than they might do or might have done today. And that's where I think the SDGs can be helpful in framing that information set so people can make choices or be advised in ways that may extract some of their preferences for how their money is put to work.
Thank you. Esther, I want to hear your perspective on this issue, particularly the question of impact in the real world. Okay, you work for an organization that facilitates reporting. How much of that is focused on real world impact, and is that element changing?
It is very much focused on real world impacts. It's really, reporting should give an overview of what a company does in terms of its governance, economic, environmental, social issues, through its supply chains, but also through its products and services. And sustainability reporting has been around for 20 years or more. And the SDGs lend themselves as a really useful set of labels or headlines, under which there's, of course, the 169 targets, which are more specific in terms of helping companies think about, based on my business strategy, based on my model, based on my industry and geographic location, what is it that I've been doing until now, and what are the sustainability impacts I've been measuring? And now, in light of the SDGs, can I think about what I can do better? Where are there additional risks I haven't thought of, and where are there opportunities that I can also try to realize through this map of the SDGs? Recognizing, of course, also that there might be some issues that the SDGs do not cover, and also that the SDGs as such do have an expiration date. Sustainable development has maybe not an expiration date, but a very urgent delivery date. So in that sense, it's complementary, it's another layer, it's not another way of reporting or not another burden, but it's more just kind of having that common language, almost taxonomy, to discuss what is it that we are trying to achieve together.
Okay, thank you. Now, we've talked a bit about this issue of the role of the private sector and its responsibility. So I'd like to take the first of, we've got two questions again this time for the audience. And I want to take the question about how much of it is the private sector's responsibility. Now, obviously, this is a very artificial thing. I'm asking you to do it in percentage terms, but I mean, it just give us a sense of, okay, so how much of the effort required to achieve the SDGs should come from the private sector? Now, I think that's quite instructive. Nobody, in fact, thinks, only... it's clearly weighted towards the upper end of the scale. Okay, so there's a recognition that the private sector is going to take a lot of the strain, which is very interesting.
Do we know how many people have voted?
I think they're still voting, probably.
People are still voting.
But it's not going to change that.
But I think we're beginning to get a consensus there. Okay, thank you for your responses there. All right, now we're going to move on to. We accept that the SDGs are something we ought to be thinking about and perhaps driving towards. So what are the challenges involved in turning these worthy aims into an actual practical business strategy or investment strategy? Are they actually helpful? How do you actually get started? Now, Seb, you are doing this, aren't you?
Yes, I mean, I think it's, I don't know how much you know about the SDGs, and there are 17 of them, so a lot of them, and there are even more sub-goals, and it gets into the hundreds by the time you get to the sort of third tier down. But they weren't written for investors. And our view is that of the 17, there are 7 that you can invest in companies that are selling a product or a service that's directly addressing the SDG. So things like clean energy, I mean, obviously that's only achievable through the sale of technology, low carbon technology, water management, healthcare. These are some of the SDGs, and they're very kind of market oriented. They are goals that will only be delivered by the very active engagement of the private sector through the products and services that they sell. But there are 10 other goals that are much more the sort of higher level societal goals around gender equality, peace and justice. You can't buy a product that delivers peace and justice to you. It's really more about how companies behave, that they're not bribing politicians and corrupting the governance of a country. So they're kind of different, actually. There are sort of heterogeneous variety of different goals in there, a bit of a hodgepodge. And there are 7 that we think you can invest in and deliver, invest in companies that are delivering against that particular goal. And then there are 10 that are much more about how companies behave. And you can engage with companies as an investor to encourage them to behave in that way. But that you can't actually invest in a company that's delivering a product that is delivering gender equality or peace and justice. So it requires a bit more thought as to how you want to engage and kind of implement a strategy around the goals.
I want to just say that I think, I agree with a lot of what Seb said. We're focused not only on the solutions and the products and services, but the processes and the practices of companies. And I think it's really important to actually address the risk dimension and some of the underlying fundamental changes that need to happen in the area of good governance and human rights that are almost precursors to addressing and achieving the sustainability development, the SDGs. And I think in some ways, you have, as a company, as an investor, you need to look at both dimensions almost at the same time in order to accelerate progress around the SDGs. And I think some of the work that the UN Guiding Principles have done around developing a coherent strategy to address some of those systemic risks, for example, we need to add to the SDG framework in terms of how we're looking at some of those underpinning issues, like good governance.
Can I ask whether this is about sort of checking before you invest in a company, whether it's got good governance, treats women well, like cares about human rights, or is it more than that? Is it a ticking off or more?
It's not a tick the box. I mean, I think what we're looking for are companies that are already proactively addressing these in the way that they source and the way they manage. For example, I think the added dimension of looking at salience issues or looking through the rights of stakeholders, the rights of people, adds a dimension that is really needed in this conversation around the Sustainable Development Goals. And in fact, highlights and increases sort of the company's ability to be more forward-thinking and changes not only how they're managing and how they're sourcing, but looking at how to create kind of that more sustainable sort of long-term growth versus kind of short-term profit.
And by salience, do you mean the size of their impact?
Salience is really actually looking at highest risk to people. So it's actually a fundamental change in, it's not contrary to materiality, and I'll let Esther take the materiality. Where does materiality and salience meet, for example? And do they?
They do.
Sorry, by materiality you mean?
Materiality of ESG or external.
To the portfolio.
To the portfolio, yeah.
A very interesting question. We should have a separate day just for this discussion. Where they meet, the focus of salience is really focusing on the risks more on the negative side, so to say, in terms of human rights risks and grievances, whereas materiality looks at both risks and opportunities and also looks beyond human rights issues, but also looks at environmental and governance issue areas. So there is an overlap, but it's not a full overlap. Now, when you speak about materiality in terms of SDG reporting or sustainability reporting as such, it encompasses risks to the business, but its focus is risks of the business and opportunities of the business. So it's an inside-out focus. And in that sense, a broader definition of materiality, therefore somewhat different from the financial materiality definition.
Okay, thank you. Will, you wanted to?
Yeah, I do because, I mean, I've been sort of working in this field for about nearly 20 years now. One of the things that has stunned me in a way about the SDGs is how, in a very short space of time, they became such a topic of the industry. I mean, we've had issuers, companies coming in to see us. In virtually every presentation we see now, there is something around that company's contribution to a range of sustainable development goals. I mean, that's sort of happened overnight. It's quite remarkable how that's changed. But I think there's a sort of positive and a negative to this. I mean, one of the negative side is that there's a danger that we'll see sort of SDG washing, so to speak. I mean, I saw a particular fund, certainly not name who it was from, launched earlier this year, and it was labeled an SDG sort of equity fund. And when you looked at the sort of detail of it, it said up to 50% of the fund will be invested in companies with a positive contribution to the SDGs. So what's the other 50% then doing? And that's always a kind of worry when you see sort of a latch onto a particular thing. And the positive side, though, is that we've had for many years a problem with narrative around this topic. I mean, we've talked already about SDG, sustainability, God knows what we'll end up with. And one of the things that I've found is that the SDGs do provide a sort of common narrative between companies and investors, both bond investors and equity investors. Because companies don't understand when we talk about ESG. I mean, they don't run a business based on ESG. I mean, we as investors talk a lot about that because that's an acronym that came out of the launch of the Principles for Responsible Investment. So we kind of use it as a terminology within ourselves. Most companies I've run across just don't know what that means really, but talk about their sort of contribution to various elements of the goals. They do. And they can see the sort of connection about why we might be interested in elements of that as it pertains to, you know, long-term sources of risk and return for that particular enterprise. So helpful, it's beginning to be very helpful in that engagement with the companies from our perspective.
Thank you.
I think that,
Yeah, go on.
so perhaps what happened overnight with the SDGs, I think it's interesting to reflect on some of the regional differences. So we've, in the lead up to the launch of the World Benchmark Alliance, we've been able to do a global consultation. So basically having conversations like this on all continents with investors, with businesses, with civil society and with governments. And I think perhaps to my personal surprise, the uptake of this in countries like India, Indonesia, and Japan is astonishing. If you talk to the big Indian conglomerates on what role they see for themselves in the SDGs, that really surprised me. Now, what that means, right, there's still a lot of, you can easily stick a few SDGs on things that you're already doing. So we have to see how that sort of materializes. I am concerned about the US, because that is where the connotation of UN gives gravity to a concept in the rest of the world, it doesn't in the US. And so which is still a very big part of our global economy.
What did you mean by uptake? You said
So the fact that the SDGs are endorsed, come from the UN, makes it count in countries like Japan and even in India, although there's of course skepticism about the UN. In the US, it seems to have the opposite effect. The fact that it comes from the UN seems to make it more
Please don't make me talk about the UN.
So I'm not putting you on the spot, but I mean it's important that I think we can all be very optimistic and pleasantly surprised by the uptake, but it's important to remain sensitive for these regional differences.
Can I comment on the India and Japan? I mean, I've actually been very surprised, because we're global investors, including emerging markets, the level of conversation in places like Japan and India. Frankly, in India, it's because it's in their backyard. They are dealing with these issues. Credit, risk managers at banks are having to deal with fundamental issues like land rights and child labor and forced labor and deforestation. So I'm not surprised, actually, about their uptake and knowledge. Japan loves everything UN, yet there's not a conversation really about the TCFD. The US, I think private sector and global leading companies domiciled in the US do have an understanding of the Sustainable Development Goals, and in fact have really tried to distance themselves from the US administration. Yep. We are still in on climate, for example.
We've seen among our US investor base, particularly among municipalities and state agencies, tremendous interest in this area. Our first green bond we ever sold in the US was to the state of California. So I do think you're absolutely right. There's a significant difference between maybe what's going on sometimes at the federal government level and what's going on in the US separately, at least from what we can observe from state and municipal level investor interest and activity.
Michael, I wanted to ask you, we've been talking a bit about, Seb made the point that 7 of the goals are probably investable from an equity point of view. 10 of them are more about managing company performance. Now, you at the World Bank have devoted quite a lot of time to thinking about how to organize your thinking around the SDGs, haven't you? How does it work for you? Do you focus on all of them? Is there a sort of filter that every investment has to go through on all the 17? And tell us a bit more about that.
Yeah, I mean, we're a little bit obviously unique because our basic business is making loans to sovereign governments, and we are able to benchmark essentially our performance by the achievement of each one of those governments, of all of the Sustainable Development Goals. But you're absolutely right, not each one of the goals is something that we fund to uniquely. For instance, gender equality, we don't have a portfolio of gender equality loans. What we do is we apply a gender equality filter to everything we do. So if we're making a loan, let's say to a government to revamp its public sector hiring processes, we would put a gender filter there. So it's not every one of the goals is directly financeable, but we can monitor and benchmark our performance against all of them. I mean, at the same time, every part of the international community that's connected with or supporting the SDGs has its own focus. So at the World Bank, our basic focus and the twin goals of the bank are poverty alleviation and alleviation of income inequality. So that sets our particular focus within the SDGs, obviously, as with a poverty alleviation focus. Another part of the international community that may be focused on health or environment would have a slightly different focus within the SDGs. But we certainly, keeping in mind that our focus is at the end of the day poverty alleviation, we certainly are able to benchmark our achievement against all of the SDGs to some extent or another.
Okay, I'd like to ask a bit about some of the difficulties. We've heard some of the advantages and potential helps that are coming from the SDG, and certainly the keen interest in them. But what are some of the sort of difficulties? In particular, what happens when they conflict? You know, for example, detergents promote health, and you'll see that on Unilever's website, I'm sure. But they can also harm aquatic environments. Fertilizer is good for food supply, but can cause pollution, carbon emissions, and economic dependency. So that's one thing to think about. And another is whether you should, as an investor, try and do everything. Or is it better to pick 3 or 4 things that you think you can actually influence and sort of concentrate on those? So who'd like to, Esther, you can.
Well, I'm smiling because you said let's focus on the difficulties, and I'm kind of stuck in solution space and opportunities. So but recognizing the difficulties.
Yes, I'm not saying difficulties to put everybody off. These are going to come up. So.
Well, I think it's, first I wanted to just mention, and I don't know to what extent that's known to the audience here today and to everyone, but there is a range of initiatives within PRI and outside of PRI amongst investors that are very much focusing on the SDGs and on sustainable development investment opportunities. Now where GRI's strength is, we provide the standards to report on sustainability issues for any organization. So it could be also theoretically for some of the players of the investment community. But where we see our strength is trying to help avoid the SDG washing and the conflicts and try to help organizations focus on what they report on. We recognize that SDG-themed investment or sustainable investment can only be mainstreamed if there is reliable, good quality, sufficient data from companies on sustainability issues. So that's where we're trying to focus, enable companies to provide that data. And to do so, specifically for the SDGs, we work together with the UN Global Compact and PRI to help companies guide through the process. So there's a so-called SDG Compass, which came out 3 years ago. It's a guidance document for companies who want to report on the SDGs, and that has been elaborated on by a set of follow-up documents analyzing the goals and targets and providing more practical guidance on, how do you avoid cherry picking, how do you prioritize, how do you combine salience with materiality, how do you actually kind of think about your business strategy and think about what is it that you're set out to achieve in this world, and then map that to what are the challenges stipulated in the SDGs or the goals, and how do you use your core expertise, your core business to help progress towards those goals. And we see that companies struggle with it, and there are some celebrated reports that just take whatever companies do and would, tag the SDG logos on them. That's great, that's a start, at least they're thinking about it. And then the more elaborate and more kind of thought through ways of reporting are when companies actually think like, where are additional things I could do or additional things I haven't thought of that are actually quite acute for me to tackle. And so it's a thought process, and it does require a shift in mentality. It does require kind of an internal enterprise risk management process where it's not the sustainability team that thinks about sustainability issues, but it's the CFO and the CEO who think about sustainability issues. So there's many prerequisites to get this right. I can just say that there's a lot going on out there, and we're trying to make our contribution. We've just recently issued a document that looks at how can companies report on the SDGs in an investor-relevant way. That is to say, sustainability reports are often called out to be lengthy, unfocused, semi-reliable. And so we're really trying to address it and to not create a new standard, not create a new requirement, but help companies think through, how do I do this? How do I get this right so that that information is there and is of good quality and actually enables the development and mainstreaming of different investment products and vehicles to truly invest in the SDGs. So we kind of like start at the bottom to help build that whole tree to enable that investment.
Thank you. Seb.
Yeah, I think if something's semi-reliable, surely it's unreliable. Can't rely on it. I think in terms of the conflict question, in many ways, I think that's the most interesting space because it suggests there's a need for innovation there. If you've got detergents that are clearly playing a role in terms of hygiene, and it's contaminating, eutrophying our fresh water, we need innovation to solve that. And that's what makes it interesting, actually. I don't think we should pretend there aren't these conflicts. Quite the opposite. We should identify the conflicts and then try and innovate around that. The food industry, I think, is fascinating. We don't have a food theme because we don't think any of the large food agribusinesses are in any shape or form sustainable. There's a lot of very interesting innovation that's happening, but it's in the unlisted space. It's a bit like the energy sector 15 years ago. It used to be dominated by big utilities. Now it's a very diversified sector with all the new technologies that have come through. I'm sure we will see the same with agribusiness. There's a conflict there, and we're seeing innovation address that conflict. So I think, in a way, we shouldn't be afraid of that. It should be something that we should focus on and seek to kind of advance. I think the other question you asked about, do we pick SDGs, is also quite an interesting one. I'm an investor. I'm absolutely about making money for our clients. And I think there is an interesting tension that has played through this conversation about whether, you talked about it being a duty of financial markets to deliver against the SDGs, kind of irrespective of what it does to your returns. I'm very reluctant to go down that route because I don't think you'll ever get a market to move on the basis of morality. I mean, we heard that story about the music festivals this morning, and where they provided you a little incentive, then sure, everything was cleaned up. I don't know if you've seen the photograph. It's incredible. It's beautiful. But don't provide an incentive, and the place is a mess. It's like any market. You do have to provide. There has to be a financial. We are investors. I'm about delivering return. So I think in terms of how you pick SDGs, some of them are just not investable at the moment, or are only investable on the basis of government subsidy. That makes me very nervous as an investor. So, our approach is to find those areas where there's genuine commercial benefit, whether it's through resource efficiency, water treatment. There are definitely markets that you can invest in that are just economically attractive without any kind of subsidy. And be a bit careful about areas where there isn't yet a market or if it's very dependent on government support.
Lauren, I'm going to turn to Lauren, but I just on that, I would observe that the perhaps pressure on the festival companies, the other ones, would induce them to put in the incentive. So there's another level at which the moral element could
Absolutely. But
create the market.
The moral has to create, exactly. You
Yeah.
can't just go on the moral element.
Yeah. But Lauren's been
Sure, really quickly. John, I would focus on the question around how do you pick sort of what you engage on or what you use as an investment theme. Similarly, we look at those that are directly investable. And then on the other SDGs, actually prioritizing on the practice side where our engagement focus is. So focusing on things like climate action or gender equality or sort of life cycle analysis, so in responsible consumption. We think it's really important if there are sort of performance gaps or a real need to kind of change the narrative, change expectations, that we focus our engagement efforts in those areas. And in fact, one of the most important strategies for engaging is actually creating new benchmarks and backing benchmarks. And I want to highlight the fact that I think there is actually a fundamental gap in some metrics and data in order for investors ourselves to even demonstrate our own alignment with the Sustainable Development Goals. And one of the difficulties I find, I've spent all summer looking at all of the Sustainable Development Goal or SDG kind of portfolio level resources. And all of them are quite different, and they're all not quite matching, and quite meeting our needs. From just focusing on positive or solutions exposure to net impact. And I think, and many of those methodologies and models are built on flawed data or data gaps. And so I think as our clients are expecting us all of a sudden to report out on impact metrics and SDG alignment, we need to sort of have the caveat that we're kind of moving, investor duty to achieve SDGs is almost ahead of the company's ability to actually, align with them. So there's a mismatch in, I think, expectations between what investors' duty around SDGs and around where companies are actually performing and what data is available to actually assess that. And I think...
So to pick up, let's be very clear, morality doesn't move markets, it never has. Perhaps it does a little bit in plastic these days because we all seem to be suddenly grow conscious and care about that. But we need incentives, otherwise we do, and I believe in that fundamentally, otherwise I wouldn't have to go through all the trouble of setting up this World Benchmarking Alliance, because that's fundamentally about creating an incentive for business to start investing in the SDGs. And I think to the point of these trade-offs, I think...
And the nature of that incentive is?
The nature of that incentive is that we demonstrate how companies perform relative to their peers, as well as in terms of absolute progress, so that we give investors and their other stakeholders the data and the insights that they need to have an informed conversation with companies on the risks and on the opportunities. And currently, we don't have many of those metrics. There are many gaps. And I think, perhaps because of the excitement, many people have, and many sort of machine learning and all of these have sort of come up in this space, trying to come up with this single framework to assess SDGs for all companies. And that's the point where you get stuck with the trade-offs. Because then you would have to put a plus for more fertilizer or a minus for, or a plus for less fertilizer and a minus for more fertilizer, right? And while the reality is that many places in the world need more fertilizer and many places in the world need less of that. And the same goes for water and all of that. So as soon as you start trying to capture this, which is tempting, in one sort of unifying framework, then all of these materialities sort of explode, or sort of all of these conflicts explode in your face. So you need to take the time and work through what it means for the food and beverage industry. What does it mean for apparel? What does it mean for oil and gas? So that's part of the work that we're doing with the World Benchmarking Alliance, precisely to create those incentives.
Okay, thank you. Now we're coming towards the end of our time, and I've got to be better behaved this time. So we've got 5 minutes left. I want to hear again from Will and Esther and Michael, and we are going to also, but before we do that, I'm going to use the other polling question, which could you display, please? Okay, I think that speaks for itself. what is the chance of the Sustainable Development Goals being achieved by 2030? Actually, I would say that is not too pessimistic a picture, because we have had Millennium Development Goals before. The whole effort on development finance is decades old, and we know that progress has been limited, but it's clear that a lot more people with a lot more money are engaged this time. And so I would take that as moderately encouraging. Okay, so just to finish off, Will, could you, and this will be the last, I'm going to have 3 more speakers, and that, Will, how do we ensure that SDG investing doesn't just add another layer of reports and talk, but actually achieve something?
I think that's the sort of key question of the day, actually. You know, as I said earlier, we can talk a lot about these sort of, you know, what we need to do here, there, and everywhere, but, you know, we have to join these things together and make this real for the end investor. And that's going to be the challenge. And I've kind of got an example of how this is being achieved on another topic that I might share, if you give me 1 minute. And it's a question around why do people get sort of excited about sort of tobacco and portfolios? And there's a kind of movement called tobacco-free portfolios now. And I'll just tell you the story about how this came about. So it was launched by somebody called Dr. Bronwyn King, who's an oncologist working in Melbourne, Australia. And she found out that in a super fund, there was a number of tobacco companies sitting in there, because she asked her advisor if that was the case. And she didn't like that, because every day she treats people who suffer from the consequences of tobacco. So she basically set up this portfolio. Now, she's a very persuasive character, but today she's got effectively over half the market cap of super funds in Australia gone tobacco-free, and a number of major asset managers also. So how did she do that? Well, what she managed to do was to sit in front of trustee boards of super funds in Australia and bridge that gap of their kind of investment goggles about we're here to make a short-term return with the reality of what their consequences of their investment decisions do to people. Because she showed them. She's an oncologist. She talked about the impacts of that. Now, we need a kind of Bronwyn King in terms of the SDGs. I mean, how do we get that sense of the reality of some of the behaviors and some of the activities we see companies do in the society we work in and live in? I remember talking to an investor from another organization some time ago who said to me, well, I leave my kind of morals at the door when I go into the office. I put my Bloomberg goggles on, and then I pick my morals up on the way home. I mean, we can't sort of have a society and an industry that behaves like that. We'll continue to have problems with trust in terms of the users of financial services. And that means we'll go around in circles talking about what needs to be done forever and a day. So the key is, how do we bring that kind of reality of this sort of big picture, not designed, as Seb said before, for financial markets SDGs, into what's the kind of impact of what my money does. So I think at the end of the day, we have to answer this question of why are we interested in this and why are we doing this work? And for First State, the answer is that we believe that our clients will begin increasingly to make and be influenced in terms of their investment choices by the outcomes in society and the environment of what their capital is being put to do.
Thank you. Time is against us. Michael, in 1 minute, we had, what are the chances that the SDGs are actually achieved? Now, you're from one of the premier development finance institutions, so I'd like to hear what you think on that.
Okay. Well, I mean, I think they are meant to be ambitious, right? So if we all said a high likelihood right now, when we're talking about achievement in 2030, it would mean we didn't set the goals high enough. I appreciated Will's comment now, because I was getting a little depressed At the end of the discussion about how morality doesn't move markets and this sort of Glastonbury $10 is the key to achieving the SDGs, because that would suggest, I think, writ large that government incentives, and that's absolutely not what we believe at the World Bank, and that's not what we've seen. We actually are sort of betting our funding strategy around the fact that morality does move markets. And we've seen that. We've seen that when we explain what we do, we get much more investor interest than when we don't. So I would say, although we don't expect investors to give up on profits, we do see that there's an element of morality moving markets here and certainly changing investor behavior.
Thank you. Okay, Esther, I'm going to finish with you. On the topic of data, and we've heard this a lot, okay? There aren't enough metrics. There isn't enough data, okay? It seems to me there's also a risk of too much, right? That there's so many different initiatives and sources of data that we don't know which one to choose. In 1 minute, can you give the audience hope that that this is evolving in a good way to a place where they are going to have more and better and more useful data?
Absolutely. Leave it with me. Yes, if you look at what has happened over the past 10 years, there's definitely much more data. There is increasingly also somewhat better data. It's still not where investors would like it to be. And I don't want to take sides, but I do see the difficulty of companies who feel that too often the sustainability and SDG type information is locked away in a department that is never visited and is down the corridor, and everybody pretends it's not important. Now, much of the solution is in empowering investee companies to put sustainability on the board agenda, on the executive agenda, and to make sure that the same rigor of producing the data, sustainability data, is applied than it is applied when financial data is produced. That there is sign of internal control, coordination requirements. That is a key to improve data. Now, if we talk about frameworks or too much information, again, I don't think that the sole responsibility is with investors, but the direct engagement, the clarity on what you expect companies to report. And there's some studies that have just been released about what investors expect on water disclosures, on climate disclosures. That helps a huge deal to companies because companies often do not know where to start. And it's not so much a question of frameworks or standards, it's about really understanding what is it that the investors use for their investment decisions that will help them produce better data.
Okay, thank you so much. I'm sure you'll all agree that this has been, the panelists have been excellent. And I'd like you to join me in thanking them. Please don't get up because I'm going to introduce our next keynote speaker in a moment, but please join me in thanking my excellent panel.